Hi guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. And joining me right now to take a look at this is the senior partner at Argentil Capital Partners, Femi Oladehin. Hello, friend. Welcome to you this morning. And let's dissect this issue. Let's take a look at, the facts, really. So welcome to you, Femi. I hope you can hear me.
Hi, Nancy, I can hear you. Please confirm you can hear me as
Yes,
well.
I can hear you. I can hear you loud and clear. Now, let's just get into the nitty-gritty. I don't even want to mince words this morning. Do you think that Oando PLC is receiving, is receiving due advantage, as it were, amongst other players? Let's just start from there.
So look, I mean, Nancy, this has been addressed both by the NUPRC as well as all the regulators. I think the truth is that transactions such as the one that Oando just closed last week take a lot of years of work before you get to the final hurdles. What Oando has done is since 2014, when it acquired a 20% stake in the OML 6064 platform through the acquisition of ConocoPhillips, it's been on this path. And the acquisition of NAOC remaining 20% in that JV is just a continuation of that conversation. So you would imagine that a company that has been in a JV with NAOC for 10 years, should actually understand the asset that they're buying just because they've had that proximity to the asset, understanding it. And of course, as you would imagine, the PIA actually has very clear and unambiguous benchmarks against which companies who are making applications to the NUPRC would be benchmarked. And if you meet those benchmarks, as we've seen with other transactions that were approved around the same timeline, you get an approval. I think it's actually disingenuous for anyone to say that there was some form of an undue advantage.
Because of course, critics, I know that it has been in the news that even within 8 months, NUPRC approved the deal that saw the divestment of ENI Agip's onshore assets to Oando. And other investors are not given the same advantage. Why? Perhaps because...
But that's not true. I mean, there are other transactions that have been approved by the NUPRC this year, at least 3 other transactions. The only transaction that hasn't been approved thus far is a transaction that has been dogged by legal challenges. So I think that we need to be, look, the social media space has a lot of, innuendos, and people just make statements without any factual basis. But there are transactions that have been approved during the same period that actually closed even or approached closing even later than the transaction we're speaking about this morning.
Now, Femi, let's try and set the context, because for me on this show, I don't move with, social media hypes and all of that. It's about let's set the record straight. It's not a tabloid show, as it were. We look at the facts even behind the figures. So I would like you to speak about the context of this deal and even some of the key points within this deal.
Okay, so in 2014, Oando PLC decided, probably about 2012, that it wanted to transform its business from a Naira-generating business to a dollar-generating business. So during that period, as you would remember, they sold off their marketing company in 2016, started a gradual sale of the company in 2016, completed that transaction in 2021. So that was on the downstream side. In the midstream side, they exited their gas and power business, again, which was a Naira business. So the company, through the acquisition of ConocoPhillips, in a journey that probably started at about 2009 when they bought some of Shell's marginal fields, OML 125 and Abendo, those transactions were already putting the company on a trajectory to this ConocoPhillips, to the NAOC JV, the NAOC acquisition. Now, there's something interesting. When they bought ConocoPhillips in 2014, they bought at the peak of the market. Production at that time was about 100,000 barrels per day to them, and to about 40,000, 50,000 barrels of oil equivalent for them in 2014. Now, what they've seen happen in the last 10 years is that production has continued to deteriorate for obvious reasons, security issues in the Niger Delta, lack of investment, and production at least started to hover around the 10,000, 15,000 mark. Now, a local oil and gas company would always have an advantage when it comes to dealing with local issues, security issues, and all of that. And I think the company took a strategic decision about 2020 to move from being just a silent operator to becoming the operator of the JV. And the only way that could happen was ENI, through its NAOC holdings, had to step aside. And then Oando started to negotiate a potential buyout of ENI's holdings, which culminated in the announcement that was made last week. So this is a transformational, transaction for Oando, because it takes them from a 20% JV interest to a 40% JV interest. But in addition to that, they become operators of one of the largest oil and gas deposits in Nigeria, as well as the most expansive infrastructure base. So this JV now controls the Brass terminal, about 2,000 kilometers of pipeline, and as well as two very big power plants. So for Oando, this is quite transformative.
Let me go back to the history of Oando again, because, of course, when they announced this some days ago, a lot of, newspaper reports, controversy, people saying that, Oando is just coming out of the blues. What I could just read on there was, okay, Wale Tinubu, President Tinubu's nephew. So I would like you to really speak, because why I'm asking this question is that for this deal, it has broader implications on the oil industry, which I will come back to later, and perhaps also interrogate some of the issues there in terms of even how easy it was to even raise capital, especially for an environment that we know is quite difficult now. So please address the area of coming out of the blues, as in you are nobody, as it were. You are Lagbaja, not a musician.
That is very disingenuous for people, and that's what happens when narratives are created without any form of facts. Nancy, when I was in BGL probably about 20 years ago, at that time, Oando completed the acquisition of Agip's downstream business, 60% of Agip Nigeria then's downstream business. Prior to that, they had done an acquisition of Unipetrol from the Nigerian government, bought a 30% interest in Unipetrol. What that tells you is that this is a company that has been in existence for at least 25, almost 30 years. And that is, I'm talking about Oando now. Of course, Unipetrol predates that timeline. And during that period, this is a company that has gone through some very interesting challenges. They raised money during the peak of the Nigerian capital markets in 2006, 2007, monies that were used for the expansion of the business. At that time, the acquisition of the rigs business, which is another business that they bought and sold. And then when we got past that period, it became clear that the Nigerian business was always going to struggle from, obviously, the Naira issues. All of your revenues are in Naira, your costs are in Naira. And they made a decision that was publicly disclosed at that time that they were going to transition the business more to an upstream player. So when people come out and present Oando like a company that started trading last week, that is completely unfair. This is a company that has raised over $20 billion over $5 billion for across different businesses over the last few years, over the last 20 years, and paid loans to Nigerian banks in excess of $3-4 billion. So to now turn around and talk about that company as something that just started last month, Nancy, we both know that's not true. It's almost like saying Total just started last week. We know that these companies have been in existence for a long time, and there's a significant track record that the market can verify.
Now, for the company NAOC, it has faced challenges over the years, especially in their operations. How will Oando now overcome those challenges? In fact, when I saw the news, what came to my mind is, you're a market person, so you understand what I want to say, or the analogy I want to paint. Unity Bank PLC and Providus. which I analyzed here on the program. So how will Oando handle the challenges as well as overcome the challenges that NAOC is posing, the impact of that acquisition on the new Oando now?
So I mean, I think that one thing is clear. The NAOC JV, which we've done quite some decent analysis on, I mentioned to you that in 2014, NAOC was producing in excess of 100,000 barrels of oil equivalent a day, also being one of the biggest suppliers of gas to the NLNG. Train 7, they're actually one of the biggest suppliers to the currently being constructed Train 7. Now, what has happened is in the last 10 years, that production has dwindled significantly. There are obvious, again, reasons for that. One primary reason for the dwindling of production was the security challenges that everyone knows that has been the problem in the Niger Delta, which is the reason why most of the IOCs have been selling. Because the implication here is Nigerian operators are able to have better and direct relationships with the communities, able to understand the idiosyncrasies around operating in the Niger Delta, and also importantly, able to have empathy for the environment where they operate in. You remember the challenges that Shell had with the Ogoni people, and a Nigerian company would be able to manage all of those issues in a less confrontational way than the IOCs would be able to do. Now, when you put that in Oando's purview, what Oando is able to do is, having been able to approach the international markets at a time when Nigerian banks are probably stretched for FX investments, it means that Oando has the credibility of the international market to be able to raise money. Now, that is extremely important for this company going forward. Nancy, I might have lost you.
No.
Okay.
Yeah.
That's extremely important for this company going forward. So what this means for an Oando is that it's able to take production just by engaging communities and doing the usual thing that a Nigerian company can do. It's able to increase its production almost immediately. Now, obviously, the next phase is all of the investment that now should have been doing that they did not do. Oando now needs to approach the market in a very structured way and raise the capital that it needs to be able to take production back to the 100,000 barrels a day level. The reality is that if it's able to achieve those numbers, I think Oando's shareholders are going to be very happy with the results that will be coming out of the company.
Now, like I mentioned earlier, the current IOC divestment climate that we're seeing right now, the harsh environment that companies are operating in, insecurity, pipeline vandalism, and all of that. Are you optimistic, or perhaps you're cautiously optimistic as to how companies acquiring, especially onshore and shallow water assets, will thrive?
Look, I'm cautiously optimistic, and my optimism is based on the fact that, look, when a Nigerian-owned company is negotiating with Nigerians, the conversations are not as complicated as when a Nigerian company, when an IOC is negotiating with people that they don't even understand the same language, they're not of the same skin color. I believe that the Nigerian-owned companies have shown a significant commitment to the local communities. And that commitment means that local communities are more in tune with the needs and requirements of the local companies. One of the interesting things that you would see in the market is that when Nigerian companies acquire these companies, the staff actually are more excited because they know that the Nigerian companies are going to treat them better than the foreign companies have treated them. And that in itself means that production, which is largely driven by the Nigerians, believe it or not, when you go to the wellheads, it is the Nigerians that are operating the wellheads, not the foreigners. And when the Nigerian knows, look, I'm committed to the success of another Nigerian company, wherein I can be a shareholder, I can be a better recognized stakeholder. We've seen in the market that these companies have been able to turn around production much quicker than the IOCs. Look, I can give you an example, for example, that when Shell concludes its sale that it's done to the Renaissance JV, you would see that immediately those guys are able to go into the local communities, speak the right language to them, and restart production. Sometimes it's as simple as just going to reopen wellheads that have been shut because the IOCs have been shut out. So I think that I'm cautiously optimistic. And I think if these companies get the right level of support from regulators and from the financial sector, we should see a significant recovery in Nigeria's oil production.
What kind of support in terms of financial support now are we talking about? Because one of the biggest issues definitely is raising capital. I know that in the PIA, of course, the timeline given for approval and perhaps ministerial consent is about 180 days. That's 66 months, if I'm not mistaken. There are challenges too that come up with this. So if you're taking a look at capital, how much of this is a challenge, especially in that sector? That's one. Then number two, I would really like to ask the question around what does this acquisition actually mean for Oando, its portfolio, as well as even value for shareholders?
Okay, so let's take the first
and
question.
The market too.
Yeah, and the market. So let's take the first question. Your question speaks to what we've always described as the ease of doing business in Nigeria. Now, the PIA has come in and put a structured framework that allows you to make an application, and within 6 months, you get an approval. The reality here is, when people follow the process and follow the rules, usually regulators in Nigeria have shown themselves to be able to work within those timelines. When problems usually start is where documentations are incomplete, or as we have in the case of Seplat and Mobil, there are legal challenges to the transaction. Now, and I think that regulators are very clear that if we are going to be able to achieve President Bola Tinubu's desires to have production back to 2 million barrels a day, regulation has to be more efficient and has to ease. And we're starting to see that in the way engagements are happening with regulators. So the PIA has come in to provide some framework, and I believe that if people follow that framework, the regulator has no reason, no justifiable reason to withhold approval when the process is very transparent. Now, when it comes to Oando as a company, what has happened here is Oando has been able to transform its upstream operations from 500 million barrels of oil equivalent in the ground of reserves, literally doubling that overnight. So that's currently $1 billion barrels of oil equivalent. Now, for shareholders, I'm going to be very careful how this comes out because, information is supposed to be very, to be analyzed properly. When you compare that to other companies, both inside and outside of Nigeria in terms of reserves, what generally happens is that as a rule of thumb, companies are usually valued between $1.5 and $3 per barrel of oil equivalent in the ground. Now, if you look at Oando's current valuation, it is way out of sync with what the market is currently valuing the company as. We've seen that stock go from about 20 naira about a month and a half ago to currently trading at about 90 naira. That tells you that the market understands that there is increasing intrinsic value that has occurred as a result of this transaction. Now, what even makes it more interesting is that Oando hasn't gone back to its shareholders to raise capital for this acquisition. So which means that when it comes to shareholder value, there is no diminution or dilution of shareholder interests. So from a Nigerian shareholder who's holding Oando stock, it means you've acquired a company that has doubled your production, doubled your reserves without having to pay for it by forking out money from your pockets. So this has to be very good news for Oando shareholders, especially for a company that has been under significant strain over the last 5 years. This is very good news.
Is Oando PLC now out of that strain? Is it out of it?
Nancy, if all they're able to do is increase production from the current 25,000 barrels to 40,000 barrels, which is their target by the end of the year, I can assure you that it's good time for Oando because 40,000 barrels a day means they're printing literally $4 million, $4 million of revenues on a daily basis. That has to be very good for the company.
How is the market taking this news aside the share price? Because I know, of course, one of the reactions of the market as to good news or, sweet spot is it's an appreciation in price. But apart from that, how is the market taking this news? That's one. Then number two, as we close this session, is the broader implication for the oil industry. And let me situate my question as around nature abhors a vacuum. So that means that, of course, with the divestment that we're seeing already by IOCs, naturally speaking, perhaps we should have our indigenous companies fill up that position. How do you think that perhaps with the advent of our Oando doing this, will it also spur indigenous companies taking over and filling that space?
So your first question, look, the positive here, both for Oando and the oil and gas industry, at least the upstream industry, we've started to see that, like you alluded to the fact that the market has responded to it by a significant appreciation in its stock price. Now, remember that the market hasn't even had enough time to analyze the upside that this transaction actually brings for Oando. So I imagine that when the Oando management come out to talk about their results and talk about the future, it's going to become even more interesting for shareholders. Now, coming back to what this means for the broader market, look, Nancy, one thing I've always said on your show is that nobody's going to build Nigeria but Nigerians. When these IOCs come into this market, they basically take most of the juice, and when the assets start to get into decline, they refuse to invest in them. And the only people who can commit to the long-term well-being of those assets, as well as the communities, are Nigerians who live in the same places with them. So when you look at the Aliko Dangote refinery, for example, for every Nigerian, that is a proud moment, because suddenly we now have a refinery that is able to refine our own crude and able to supply petroleum products to us, which is what Nigerians have been demanding for the past 30 years. Now, if you do that for the upstream industry as well, it means that companies like Oando, like Seplat, like Aradel, the ones who have been indigenous players, but peripheral indigenous players, are able to step into the vacuum that these departing IOCs have created. And what that means for them is they're able to, deepen the reserves of the Nigerian market, also become even bigger players in the midstream section of the market, which is gas, because that's one thing we don't even talk a lot about. Gas is the oil of the future, and Nigeria has probably one of the largest reserves on the continent. So if these companies are able to strategically position themselves and acquire these assets from the IOCs, restore production to respectable levels, it's fundamentally important to the Nigerian economy, and we'll start to see the benefits of that. So my outlook is we're going to see a lot more transactions like this, and when they happen, the Nigerian people are going to be the biggest beneficiaries of it.
Now, as we close, having said all of this, I'm not working for Oando. I don't have a day-to-day bedside view of it, but I'm actually also asking myself what the key focus areas will be now for the company, because I did the same when Providus and Unity Bank merger was announced. I looked at it extensively here and what the key focus areas would be for those companies. So for Oando now, that has been an active JV partner for a long time, what will be the key focus areas for this company?
So if you read the statement that was issued at the closing, Oando were very clear that for them, upstream is the future. If you've read the accounts that they've released in the last 2-3 years, that upstream is the future. In addition to this, there's one big element of this transaction that I think the market hasn't even come to terms with. Oando, through this acquisition, now has a 40% interest in one of the largest power assets in the country. It's about 1,000 megawatts of production on a daily basis capacity. Now, so for Oando, it's basically put itself in a position where, one, it's dollar revenue generating, even in the Naira space where it's selling power, that's also pegged to the US dollar. So in the event that there's a devaluation of the currency, for the Naira investors in a company like Oando, they're big beneficiaries. Now, focus for them has always been, they want to increase their footprint in the upstream space. So I imagine that a company like Oando will be looking at further divestments and seeing how they can position themselves, having unlocked value from this first acquisition. And when that happens, the sky has to be very interesting for them as a company.
Okay, let's see how that goes. Thank you very much for your analysis, as always, Femi.
Thank you.
You know, one of the thought leaders on the show. Thank you very much, my friend. So I'll see you soon.
Thank you. It was a pleasure.
Thank you. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to the channel, drop your comments as well as like, and most of all, share our content. Bye.